Netflix stock is down 40% since November. On Friday alone, the stock price declined 20% in one day. Ladies and gentlemen, I'm here to report that the flight to the moon has been canceled and we are not issuing any refunds. If you are new to this channel, my name is Mariusz Konieczny. I run Microcap Explosions, a website dedicated for microcap stocks ignored and hated by the investment community. I also wrote about 10 books on investing, one of which is available for a free download at microcapexplosions.com, so make sure you get yourself a copy. Netflix stock has been the darling of Wall Street, but this is especially true during the pandemic. Netflix stock has been the pandemic stock. At the beginning of COVID, people said, well, you have to buy Netflix stock because people are going to be stuck at home and they're going to be signing up for Netflix. They did so and the stock went up. The following week, they said, you have to buy Netflix because of the pandemic and people are going to be stuck at home and they're going to be signing up for Netflix. They did so and the stock went up. Then they said the same thing the week after, the week after, and the week after. And then I thought to myself, well, wait a minute. Didn't you say it already? Isn't this pandemic stock or the pandemic surge, isn't this kind of already priced into the stock already? I mean, it's like saying, this house is beautiful because it has a nice yard and a pool. The price, $100,000. Then a week later you say, this house is beautiful with a nice yard and a pool. The price, $120,000. Is the price supposed to increase by $20,000 every time you say it? I mean, at what point are you going to say, yes, I understand. The house is nice. It has a nice yard. It has a pool. But is it worth $1 million just because you say it 50 times to me? The same thing with Netflix. I like the business. It's a great business. I'm a user myself. Look at the financials. In 2016, revenues were $8.3 billion. In 2020, they were at $25 billion. Incredible growth. This is a 3x growth in revenues. But look at the net income. During the same period, net income grew from $186 million to $2.8 billion. That's a 15x growth in net income. This happened because of the operating margin expansion from 4% to 18% during the same period. All of this is absolutely amazing. But just because it is amazing, does it mean that it should carry an unlimited price? I mean, amazing is amazing, but there is no unlimited in amazing. During the pandemic, obviously investors didn't get this memo because they sent the stock price from about $300 per share to $700 per share during this period. Now they are getting smoked because the stock is literally in a free fall. During the pandemic, they were paying about 50 times earnings for the stock. And I have to say that it's not ridiculous price considering what the growth was going to happen during the pandemic. But when the stock reached $700 per share, even if the earnings were going to double, investors should have started questioning themselves because even under such scenario, the valuation was going to reach about 60 PE. And they should have started questioning themselves at that point because the pandemic growth obviously was going to slow down unless we were going to have another pandemic followed by the first pandemic. So paying 50 PE for the stock at the beginning of 2020 was a completely different story than paying 60 PE after the pandemic is coming to a close. You see, before the pandemic, we knew that the growth was going to be incredible. But now that the pandemic and the economies are opening up, it's not that hard to realize that that kind of growth is not going to get repeated. And you might actually have people dropping the service because they sign up for it and they didn't really want it. So the growth, any sort of growth, is going to be much harder to achieve now after this huge surge in the subscriber base that was caused by the pandemic? Well, this question didn't seem to concern investors until, of course, Friday. The company reported its financials on Friday, and the stock is crashing. It crashed 20% in one day, which is a big haircut for a company like this. You might ask if something really bad happened. Did the company started losing money? What is going on to cause 20% haircut in the stock in one day? All that happened was a slowdown in the growth rate. That's it. Just a slowdown in the growth rate, which means that the company is still growing. It's just not growing as fast as people thought. That's all that was needed for the stock to crash 20% like this. You see, this is what happens to growth stocks or any stocks when the valuation is ridiculous or the valuation is stretched to its limits. Any little hiccup causes the stock to get destroyed because any little thing causes people to panic and sell the stock, which is exactly what's happening with Netflix. The growth rate is slowing down and the competition is heating up. Is this really surprising? I mean, Netflix has about 222 million subscribers. There is a little bit over 300 million of people in the US. So unless you start signing up infants, it's not that hard to see that the growth is limited and the company is reaching maturity. Yes, it can sign up people in other countries and it is of course doing this, but the biggest growth came from the US. And you can say, well, but there is 1 billion people in India and then they're growing in India. Yes, but do you think Netflix can sell subscription to India for $12 to $15 per month? No, they have to charge those people much less, and that kind of growth, even though there's a huge potential, that kind of growth is not very valuable because they can't make as much money per user as they are making in the US. The point here is not for me to show you that Netflix is overvalued, even at today's price. Actually, looking at the numbers, the stock is reasonable, but that's not the point. The point that I'm trying to say here is that when you have a stock that the valuation is stretched to perfection, any little thing will cause the stock to get destroyed and to come down to earth from its journey to the moon. Today, Netflix has about 222 million subscribers. I don't think it's unreasonable to think that within 3 years, the subscriber base will reach 300 million. At $15 per month, the company will generate about 54 billion in revenues. At 10% net profit margin, this will translate into 5.4 billion of net income. So what is this worth? Well, at 30 PE, which I believe is reasonable, this is worth 162 billion. Today's market cap, even after 40% haircut, is 222.5 billion. So 162 versus 225 billion. Am I a buyer? I don't think so. But Netflix continues to raise its price. Right now, they just had another price increase from about 12 to 15. So maybe I shouldn't be using 15. Maybe I should be using 20 or 25 per month. So let's try that. 300 million subscribers times $25 per month gets you to revenues of about 90 billion. At 10% net profit margin, that's 9 billion of net income. What is that worth? Okay, let's again apply 30 PE and we get 270 billion. So we have 270 billion, today's 225 billion, an increase of about 20% or an opportunity to make 20% in 3 years, even after the price increase to 25, which is questionable. Is this worth 20% over 3 years? For me, I don't think so. Will they be able to increase prices to $25 per month? Maybe, But as they increase prices, the growth rate will obviously slow down. Also, the competition is heating up. So it's not such an easy thing as to just change the number from 15 to 25. The competition is heating up every day, whether it's from Disney, HBO Max, Amazon, and all sorts of other streaming services. To be honest with you, I have Netflix, but it's not that great. It's okay, I have it because I don't have cable, I don't have anything else, I just have Netflix and free public TV. But Netflix is driving me crazy when it comes to searching something on Netflix. It takes forever to find anything on Netflix. So if I disconnected my Netflix today, I don't think I would be crying. In summary, Netflix was the pandemic stock, and everybody wanted to own it because it was the pandemic stock. It was going to grow, they were going to pay any price for it just because people were going to sign up due to pandemic. They didn't care how much they were paying, they didn't care that the valuation was approaching 80 times earnings. They didn't care. All they care about, there was a growth stock, and now the growth slowed down. Investors got disappointed. They started looking at the portfolio, being like, what is it that I own? What's the valuation? And as a result of this little hiccup, which is just a slowdown in the growth rate, the stock is crashing. It's in a complete free fall. For me, even at this price, it's not attractive. I like the company, I don't like the valuation. I have much better places to take my money and put it to work than in the stock of Netflix. With that being said, thank you for watching this video. I hope you enjoyed this content. I would greatly appreciate if you subscribe to my channel, like the video, comment on the video, share on the video, help me grow this channel. So once again, thank you for watching.